Hey everyone, welcome to another episode of Keeping It Capital. I'm your host Ethan, and today we're here to talk about stablecoins. Now, I know that's a topic that we've already covered on this show before, but we're going to cover it from a little bit of a different angle. Today we're here to talk about stablecoins, a new frontier in payments legislation. So let's set the scene a little bit. Money's already digital, so what's different here? You Venmo someone, you get your money. You get your paycheck on a Friday, your money moves. We've had digital money for decades. So what's different when it comes to stablecoins? For stablecoins, it's not just digital. They're programmable, borderless, and you can send money in seconds, and virtually without any banks in the middle of them. So to make it feel real, let's talk about a problem that stablecoins are actually solving. Cross-border wire transfers. Let's say that you're here in the United States and you need to send some money to a friend or a relative in a different country. That could take anywhere from 3 to 5 days for that transaction to actually go through and cost you anywhere from up to 2 to 7% of the total money that you sent over. That's the system running in the background where correspondence banks will send money to each other from peer-to-peer institutions and take little bits of money along the way. Stablecoins provide an alternative mechanism. Same value, same dollar, all processed in about 3 minutes and typically for only a few cents of the total transactions, to power what they call gas fees. Unlike other cryptocurrencies, stablecoins are pegged to a fixed asset, most of the time the US dollars. So one stablecoin will always equal one US dollar. The Genius Act passed in July of 2025, and it was the first ever piece of cryptocurrency legislation and specifically applied to stablecoins. Prior to the Genius Act, there wasn't any federal oversight. Basically, the stablecoin issuers went out and said, hey, trust us, we've got your money. So when the Genius Act came along, it said stablecoins, they have to be pegged one stablecoin issued to one US dollar backing it. And you have to be able to prove it. Another notable piece of the legislation is how yield economics worked, and it draws a pretty hard line. Stablecoins, specifically their issuers, cannot pay yields to the people who hold it, at least not directly. Some cryptocurrency exchanges have been able to skirt around the rule by basically saying, hey, we're not the issuers of the stablecoin, but we can pay you in what's called rewards. So essentially functioning as an interest-bearing product. And that's something that the Clarity Act hopes to rectify. That yield prohibition conversation is exactly what we're going to get into with our guest expert today. We're here interviewing Megan Ryan from the American Banker. We're going to talk about the current legislative landscape and where everything sits right now, what it means for stablecoins, and what it means for stablecoin payments and how you and I use them every single day. Without further ado, let's get into the episode. Welcome, everyone, to episode 7 of Keeping It Capital. I'm your host, Ethan, and today I'm joined by Megan Ryan from the American Banker. Megan, thank you so much for coming on the show and sharing your insights with us. Before we get kicked off, could you introduce yourself a little bit?
Yes, thank you, Ethan. Happy to be here. So I'm Megan Ryan. I am a market intelligence analyst, specifically working in payments for American Banker. I have been with American Banker for 3 months now, but with American Banker, I write around all things payments, particularly with a focus on how payments are shifting, how they're being impacted by innovation and technology. I also help do research for American Banker. And I actually, before coming to American Banker, I was at the Federal Reserve Bank of Chicago for 5 years. And there I was a payments policy analyst. So I've been doing payment stuff for a little while now, which is kind of crazy. But when I was at the Fed, my work was really around similarly like innovation tech. I mean, obviously, there's been a lot that's gone on in the past
Mm-hmm.
10 years in the worlds of payments and how things have become more modernized and digital. So when I was at the Fed, I was focused on how those things are impacting the payment landscape domestically and globally, but specifically from a central bank perspective. And now I've been able to kind of broaden that perspective to just the general banking industry and financial services industry now at American Banker.
Very cool. Thank you so much. Again, thank you so much for coming on the show. We're really excited to get your perspective on this. So one of the things that we talk about is also being in the payment space is we've seen a lot of that innovation that you're talking about, and a lot of some of the innovation that you've been talking about in the papers that you've written are about stablecoins, and that's what we're really excited to talk about today.
Mhm.
So for you, was there ever a moment where you first heard about stablecoins and then it clicked for you that this is something that's like genuinely interesting, something that's
Mhm.
genuinely going somewhere?
Yeah, it's funny. I was first introduced to stable coins, and I think actually mainly cryptocurrency. When I
Hmm.
was at the Fed, one of
Hmm.
the things that we were doing was making sure that we were aware and obviously well educated on what was going on. And
Right.
one part of my role was taking stock of where things were domestically and globally. And actually around
Hmm.
that time, so it was crypto that was a really big thing,
Right.
Bitcoin, Ethereum, all that
Hmm.
stuff. And I would do kind of this like quarterly report on what was going on. And there was actually a lot of that was when CBDCs was also a really big
Right.
topic. Um, there was also like the NFTs, all of the meme coins.
Right.
And so I
Right.
think when I was, when that first kind of came onto my desk, there was a lot of questions around specifically like what does this actually do, if anything, for payments
Sure.
specifically? And it's really interesting because like when you look at like the genesis of crypto and
Hmm.
Bitcoin and all that stuff, it's for a peer-to-peer payment
Right.
method,
Right.
to make payments digitally, kind of in the same way that we make payments with cash. So it
Hmm.
was interesting to see, I think, all of the iterations and kind of like the journey that it's gone on. So
Definitely.
I've always been a little like, I don't want to say like skeptical, just but I really
Yeah.
want to understand like the ways that it tangibly impacts or changes payments. And I would say that that has kind of happened in the past couple of years, where I sort of found my research switching from, oh, this is just kind of speculative or
Sure.
maybe more of a investment mechanism like with
Hmm.
crypto. And
Hmm.
then I think obviously with the development and the growth of stable coins, did that
Hmm.
become more of a potential mechanism for certain types of payments, and just seeing, I think, in areas or specific corridors, so specific countries where it's grown. Then obviously there's been some changes from a regulation perspective, but I think you've just also seen banks and financial institutions. It's, everyone's been talking about it for a long time. And so I would say from a technology perspective and an actual infrastructure, it's been over maybe like the past 2 to 3
Yeah.
years that it's kind of been like, this doesn't seem like this is really going to go away. And we've seen a
Right.
pretty massive shift with just like the talent of the
Hmm.
people that are running these really large, crypto based firms. You see a
Hmm.
lot of people that have been in traditional banking going over and having pretty high level positions up there. And so I think when you kind of see that shift, you start to see that maybe this traditional finance and decentralized finance is kind of increasingly getting melded
Right.
together in certain
Right.
ways.
Right. And
Yeah.
and for me it's really interesting to see like the maturity of the space growing, and I think one way that's really been captured has been in the regulatory landscape, has been in the legislative landscape with what we've seen in the Genius Act.
Hmm.
So, for those of you in the audience who haven't heard of the Genius Act before, passed in July of 2025, the first real cryptocurrency and stablecoin legislation that we've had, at the federal level, that's for
Hmm.
sure. So
Yeah.
could you tell us a little bit more about that?
Yeah, yeah. So that was passed last July, and I believe it's supposed to be like fully operational come 2027.
Right,
So it's
right.
definitely been, I know it was obviously a very big deal when it came out, but it basically is just a way for institutions or entities, whether you are a fully regulated bank or
Hmm.
a non-bank, basically, someone that's or an entity that's not regulated the same way that a bank is, to
Hmm.
become regulated with issuing stable coins. And
Right.
so there's a couple of ways that it can be done. It's kind of dependent on if an institution already has like a state license or if they already are federally regulated, but it basically just kind of helped to define the way that these institutions are overseen by the Fed, the Treasury, and FDIC. I think
Right.
FDIC. Is that how you say it? Yeah.
Yeah, yeah,
Yeah.
yeah.
There's so many acronyms sometimes that I'm like, wait, what? And basically it's advertised as or discussed as a payment mechanism.
Right.
So the ability for these institutions to either issue their own stable coin
Hmm.
or not necessarily custody it, but collaborate to issue a stable coin. I
Sure,
think, yeah.
sure.
And so it just provided more, I guess, like regulatory clarity on how to do those things. To a degree, I think it'll be really interesting to see how that plays out. But yeah, it's been interesting to watch, but really just having more clarity on like if you go one route, who regulates you,
Hmm.
if you go a different route, who regulates you.
Right.
Basically just I think providing some of the oversight that I think, the crypto or the digital crypto world has been kind of wanting.
Right.
Um and but also not wanting. So we'll see how
It's
it plays out.
it's really funny and really interesting because one of the things that I've seen in the stablecoin space is you do have some of the players like who are trying to like merge the whole TradFi and DeFi spaces, especially as it relates to like that anonymity and like bad
Yeah.
actor type space. So one thing that's like super important in traditional banking is the know your customer and
Yeah.
anti-money law requirements that like go into like, hey, that's like how you create a bank account in the United States. And essentially, like that's what some folks are like essentially arguing and kind of preparing for that
Right.
in the cryptocurrency space as it relates to stablecoin payments. And I thought the wording that you used in that last response was maybe a little bit intentional, maybe a little pun intended there, because there is further legislation that is being discussed right now,
Hmm.
just past the Senate Banking Committee.
Right.
So, what is the Clarity Act, and what does it do?
Yeah, so I mean, I will say I'm not a lawyer.
Right.
Um,
Sure.
so and we'll see how this ends up playing out. But from my understanding, the Genius Act kind of provided some clarity on like where the Fed plays a role, where the OCC plays a role, where the FDIC and the FDIC, and then there was also, it's funny for how it was a very long bill, but there was
Hmm.
also a lot, I think, kind of left open,
Yes.
which is what prompted, I think, for a lot of reasons, the Clarity Act. And,
Yes.
from my understanding, it seems to be really trying to iron out a lot of the specifics.
Hmm.
And that I think is definitely trying to distinguish some of the oversight by like the SEC as
Right.
well as the CFTC. And just figuring out, I think, the jurisdictional boundaries between
Hmm.
who is responsible for what.
Right.
And crypto and stable coins are very broad because like the Genius Act is specific to stable coins.
Hmm.
It does not cover like Bitcoin or tokenized deposits.
Right.
And I think that's what's a little tricky about this whole, I guess, like area of technology is there's a
Yeah.
lot that has come out of it.
Yes. Yes.
And so the stable coins, with the Genius Act, that I think specifically is trying to relate it to payments.
Hmm.
And then expanding from that is the Clarity Act to provide
Right.
some additional clarification on like where SEC retains oversight, where
Hmm.
the CFTC retains oversight. And then you mentioned earlier too, but making sure that the anti-money laundering
Hmm.
requirements is very clear, as well as like the Bank Secrecy Act. It's like the BSA.
Hmm.
There's a lot of regulation that is involved in payments and that banks are subject to. And while it can feel very cumbersome, there are reasons for
There,
that.
right. There is a point to having those barriers. So, just because,
Yeah.
yeah. And that's something that like I've found very interesting in the space. And I think we're going to get on, into it a little bit later on in the conversation. But, just how like, at the end of the day, most stable coins, and we've explained stable coins on this podcast before,
Okay,
but just
good.
like a right, but and just like a quick refresher, and I'm sure we probably did it in the introduction at some point, but stable coins are essentially cryptocurrency without the volatility. They're specifically tied to one-to-one pegged to one stable
Hmm.
coin equals one US dollar. So functionally, what that means is there needs to be some type of like US dollar backed asset behind it. And
Yeah.
oftentimes that is, short-term treasury bills. And that's like a really big piece of contention, which I find like really convoluted in my mind. But like I know like that there are reasons that like we have these regulatory, barriers in place. Like there is supposed to be like hurdles that you have to jump through, in order to number one, issue these coins, but also like
Right.
collect on the yields of them.
Yes.
So for those of you who aren't familiar with like, what yield economics are, stable coins have a tendency to pay out anywhere from like 3 to 4.1%. That's something that you'll see advertised by Coinbase for their
Hmm.
depository bases. They'll offer you, 4.1% APY, which is kind of unheard of
Hmm.
in terms of, yield payouts and interest payouts. And we don't necessarily have to talk about like, the contents of like what that means within the Clarity Act, but I would like to talk about, the yield, your opinions at least on, the yield economics conversation. So
Yeah.
why is it such like a big point of contention between, some of the major bank lobbies and then,
Right.
the crypto exchanges?
Yeah, yeah. Well, and so the yield conversation has been a big one with
Yeah.
the Clarity Act
Sure.
and whether or not the Clarity Act will allow for yield on stable coins and
Right, right,
people or consumers or businesses or whoever holding these stable coins. Because in the Genius Act, that was not allowed.
right.
From what I've heard in the industry,
Hmm.
one of the main, just from talking to bankers or people
Yeah,
in the financial services industry, one of the biggest concern is that if they're offering these yields, that it could be like a deposit risk,
right.
which basically is this idea that normal humans, like, I don't know, the average consumer or
Hmm.
businesses, but you hold money in a bank account.
Yeah,
Obviously, I think it's well known that like checkings and savings account have these very small interest returns. And
hmm.
so there's concerns, and I think primarily there's concerns from maybe smaller institutions,
Sure, sure.
community banks, and I do
Right.
think that that is a bit of a tricky thing that sometimes gets overshadowed in all of this because
Hmm.
in the media and in how things are reported on, it's the big banks that are very involved and integrated into how things are playing out. But there's concern that people might
Right,
pull
right.
funds out. And so, I think maybe the larger banks that might not be as big of a deal for them in reality. And
Hmm.
we might even find that there isn't a deposit flight risk.
Sure.
And I think there's so many questions on that, and it's hard. I really don't know what's going to happen
Hmm.
with how this is going to play out and how
Right.
the Clarity Act is going to play out. I know that they've like floated ideas of doing some type of rewards, and maybe it'll just give people another option for where they want to store their money or how they want to store it, or maybe splitting up some of the storage. But that's been kind of the concern
Right.
from banking institutions, that they are worried that it would create a competition that could be
uh,
worrisome,
Deposit
essentially.
flight, right. And
Yeah.
you do need, you really do at the end of the day, because like we don't have like this, like 100% like inclusive like overall banking system in the United States. Like there are communities that like are genuinely underbanked, and if like
Hmm.
I'm a guy who sees an ad on TikTok for 4.1% APY, like I'm probably gonna go ahead and put my money from like my local regional bank there. Like
Right.
I don't know. Like I think that there is something to be said with like the whole like vote with your feet argument.
Yeah, well, and it's interesting, like banking and payments, it's
Hmm.
very personal, like
Yes,
per
yes.
individual. And I think that's what's like that's one of the things that I've really enjoyed about getting to work in payments is
Hmm.
it is personal. It's like how
Definitely.
you learn what you learn from your environment, what you learn from your parents. Like even
Hmm.
if you look at some of the data just around, you know, before I before a lot of my work became crypto and stablecoins, it was actually on like the term non-banks, which I feel like it has a completely different definition now
Yeah,
than it did
yeah.
like 5 years ago. But non-banks were like, you could classify that as like Apple with Apple Pay or
Sure.
Chime or Cash App and
Hmm.
PayPal. But those are all different types of P2P or digital wallet apps.
Right.
And how people use those is super personal. And
Hmm.
you can kind of see different demographics, how they choose which ones they subscribe to and which ones they don't subscribe to. And so it's highly possible that we'll see that approach with this whole stablecoin, crypto world and how it develops alongside regulation and oversight.
Right. And
Yeah.
so like I'm curious, I think that like personal aspect piece, it brings like a really interesting point in the conversation because, along with that maturity that we talked about, like not just from like a regulatory perspective, but
Hmm.
just like from like a product and goods and services perspective, like where are you specifically seeing, or maybe even generally speaking, like uses of stable coins, like within whether it's like peer to peer or like, that off-ramping layer, like where you can cash out and spend and use your stable coins in
Right.
the regular economy.
Yeah, well, and I think it's now it's gotten to the point too where I think there's a distinction where you have cryptocurrency, which I
Yes.
think Bitcoin and Ethereum and Solana and what, as you mentioned, part of the reason why it has not been as mature as a payment mechanism for some people and for some corridors is because it's so volatile.
Right.
And that was actually, I think, one of the main pushes towards a stable coin. It's supposed to be backed one to one from with a US dollar in some capacity, and those reserves that back them up have to be incredibly liquid. Like that
Hmm.
was the whole drama that happened with
Right.
SVP and not,
Right. The
if people
depegging of USDC.
exactly.
Yeah.
And if
And
you want your money, you can get your money,
mhm.
So because of all of that, like stable coins have definitely taken, I think, kind of the front stage in terms of payments
Hmm.
specifically. I think
Hmm.
crypto and all Bitcoin and whatnot like is used primarily more as a asset, as a trading mechanism.
Yeah.
Yeah,
And
and
that's and I think and I'm like pretty sure that's something that the Clarity Act also covers is
yes.
like the different categorization of like asset
Hmm.
classes.
Right.
And I'm pretty sure like more and I keep coming back to the word mature, but I feel like it's like a very fair way to like describe the space. Like the more mature assets, so like the Bitcoins, the Ethereums, the
Yeah.
potentially the Cardanos, the Solanos, those would be like classified like the same way like gold would be like the commodities, right?
Yeah.
Yeah.
Yeah. Yeah, exactly. That I think that'll also be a way some not trying to I keep using this pun, but like it will provide hopefully more clarity on just how to classify
No, it
things, which
works.
I do feel like is half of the battle that
Right,
has
right.
been with all of these products is like what even are these? How are we
Hmm.
distinguishing these things? I think even in the industry to get back to your first question with like where stablecoins are being used for payments, like I
Yeah,
think that was a big question. Like when I was first introduced to this, it's like, what are these things being used for? And
right.
as time has gone on and regulation has occurred, but also I think products and services have developed.
Hmm.
We're seeing stable coins being used for payments. One of the big use cases that's talked a lot about is with cross-border payments.
Right,
We've
right.
seen, the most, I guess you could classify it as maturity in specifically like other countries
Hmm.
like Latin America. And, I know this is
Yeah,
kind of
yeah.
well known, but, sometimes payment systems are, not reliable or the
Hmm.
fiat currency is destabilized or
Yeah.
not, people can't make payments with it in a reliable way. And
Hmm.
so stable coins have been a way for people to transact for
Right.
goods and services. And a lot of the stable coins are in US dollar. And
Hmm.
so they get access to US dollar, but it's
Hmm.
also a good way for if people who are living in the US and want to send money across borders to
Yeah.
friends and family, they have been utilizing stable coins for specific cross-border payments. And cross-border payments is like a whole other topic, but we've definitely seen that be a stronger use case for stable
Definitely.
coins.
And I've seen at least one company out there, in the stablecoin payment space, that like one of their like go-to-market value props is specifically about like, dollarization, like for
Hmm.
LATAM companies and, US dollar availability. And
Hmm.
and that's something like you don't necessarily like think of right off the bat as like, like a net outcome of
Right.
like a digital payment currency. But
Yeah.
yeah, I mean the access to the dollar is like it's really big. But one of the things that would also be really interesting for us to discuss, when we're thinking like, more so back to the, American side of the things. So this might be never mind.
No, it's okay.
We have an intern on the show right now. It's my little brother. His name is Ben. He helps get, the podcast get set up. So if I wanted to go out today and I wanted
Hmm.
to get him, $100 in T-bills for his graduation,
Yeah.
why can or and this is like purely your opinion on the matter, like why do you think like I it should be okay for me to like go out buy a short-term T-bill for him like as a graduation gift? He could get that 4% 3% like whatever that yield is, but
Mhm.
like I couldn't necessarily get that like with a stable coin, or at least like how it's being currently discussed in like the new form of the legislation with the Clarity Act.
Yeah, yeah. Well, and I'll just preface this is, everything I say is my opinion. It is not reflective of who I work for. But,
Right.
I think it's a good question. And I think it's what is so interesting to me about stablecoins and crypto is, I mean, I always go back to the original paper, and the
Hmm.
entire premise behind it is to not have centralized oversight, to be
Yeah. Yeah.
decentralized, to not have intermediaries. And I think it's interesting because it has progressed in ways that there kind of are intimate
Right.
intermediaries in
Right.
certain ways. But I also always think about, like, when I was working for the Fed, one of my biggest I guess kind of like goals was always understanding, like, how are payments efficient for just like the average person, and like
Yes.
how do you make sure that payments are reliable, they are resilient and
Right.
affordable for just people. And I think what's tricky about stable coins is that it's trying to find the balance of letting innovation be innovation and
Right.
providing additional options to consumers
Hmm.
alongside the risk and I guess you could argue, the unknown aspects of it. And,
Yeah.
for maybe for better or for worse, like, there has been concerns with cryptocurrency, with things not being, liquid enough to
Right.
return on the investments. And I think also it's the type of stable coin too that's being chosen.
Hmm.
The two biggest stable coins by market cap is Tether and Circle, and
Right.
Tether is massive.
Hmm.
And if you look at the historic operations, you could
Right.
make an argument that maybe there is some uncertain activities going
Right.
on.
Something potentially illicit behind the scenes, and we don't have to discuss that
Yeah.
any further.
And for regardless, the
Yes.
nature of the technology being anonymous and all that stuff, it has been utilized in certain ways that are concerning from a payment perspective. And so I think that's what's tricky is, like, I'm not a regulator, I don't know what the right option is, but it's, I think, this push and pull of making sure checks and balances are being adhered to.
Right.
And I always think about it from the end user consumer. Like, your
Yes.
odds of, if you go and buy a treasury bill, the
Hmm.
odds of that going south are pretty low.
Right.
Like,
Right.
it's pretty low. I don't know if I can fully say with confidence that a stable coin with like a similar yield
Yeah.
would have the same risk tolerance potentially.
Interesting.
And that's,
Interesting.
and not that it couldn't one
Right.
day,
Right.
but I think that's, what's interesting. I guess the analogy I'll give is, I was at a conference a while ago, or a month ago actually, and when you're talking to banking institutions, whether they collaborate with a crypto firm or a stablecoin firm, but when something goes wrong, it usually goes back to the bank. Even
Yeah.
if the bank it's not their stablecoin, the only thing that they did was fund or defund
Right.
it.
Right.
The customer service is just not there in other aspects. And so I
Hmm.
think that's where we are right now, is like, how, when you think about like the practicality of, like, if something goes wrong, if something falls apart, do we have like FDIC insurance? And that's
Right. Right.
where I think it's tricky, is like figuring those things out is hard, and it takes some time, and it
Yeah.
doesn't mean that, like, you shouldn't have the choice between these two things.
Sure.
I just think that is kind of where some of the friction is coming from in terms
Yeah.
of the broader discussion.
Right, right. And a lot of what you're saying and a lot of what I'm hearing is like the closer that we get to like having like stablecoins in a more regulated environment, like where you are seeing, stablecoins being used in some mechanism to be able to like fund, consumer to business payments, not and outside of the peer-to-peer payments, you
Hmm.
get away from like the more DeFi aspects
Hmm.
of the stablecoin. So I go ahead. It
Oh
looked
no,
like you had a
yeah. No, I think yeah, and you bring up a good point. And I think I don't know, it's interesting with I've been covering crypto and stable coins for a
yeah.
while now and just banking in general.
Hmm.
Like I think a lot about the concept of like trust and
Yes.
what are we willing to put our trust into and how confident are we in our trust? And this is not to say that like like banks are like these perfect entities, but like we
Right.
all do put our trust into
Institutionally,
institutions,
yes, yes. And yeah.
Yeah, yeah.
And that's, it's a very funny thing to me, because our entire conversation has been like about, okay, you know what, like stable coins, like number one, like you have to trust like first that that digital asset is a dollar.
Yeah.
But at the end of the day, like fiat currencies are essentially all they're built off of is trust, you know?
Hmm. Yeah.
So, I've always been curious, and I had this thought in the space that like let's say like we went to like a 100% crypto based like global payment system.
Hmm.
Like I think at the end of the day, one of the interesting pieces is like you do have like quote unquote like they call it gas to like power
Right.
crypto, like underlying like energy and electricity that you
Hmm.
need to have to like prove these quick cryptographic equations and
Yeah.
hash functions and able to like to actually be able to like process those transactions. So this is my, like big pie in the sky idea, but like I've always thought like do you potentially think that like stable coins like not only offer that trust barrier, but like the derivative of that trust is also like, the energy that is like funding it. So I'm curious if you think like and maybe that's getting like far too speculative. Maybe the better question is like, okay, like are when do you think we're gonna get to a place like where we do see stablecoin payments in our everyday lives?
It's a
For the
really
average American, at least.
right. I mean, you're basically asking the question I am asking myself like every single day.
Yeah.
And because it is curious. I mean, I think about how long this has been talked about and
Hmm.
I think of all the conferences I've gone to and all of the speakers and all of the topics and it's always around stable coins and crypto. And you know, I think it's hard to be like, okay, but where is it actually impacting things?
Right.
I do think that the technology provides a lot of benefits. But then, it's funny, I was out to dinner with some friends of mine.
Hmm.
And I was like, well, do you guys have any thoughts on stable coins? And they were like, I don't know what you're talking about. And I literally don't care,
Right, right.
And I
Yeah,
think that's
yeah.
what's hard. Like, if you think about just like the average American or the
Right.
average person trying to make daily payments, it's like,
Hmm.
how do you get market share of like, how do you convince people to use a new technology that they are like, I don't even know what that is, and I'm
Right.
busy and I don't have time to like deal with that.
Yeah, yeah.
Because I think a lot about like the success of like Apple Pay.
Hmm.
And it's really interesting because like I mean, do you use Apple Pay?
Yeah, every once in a while, but like more
Yeah,
often than not, and I feel like this is only because like I'm in the payment space. Like
right.
I'm using my credit card because like I don't want the like the what like the 0.05 bips to go to Apple.
Yeah, no, literally. And that's the thing, but it's like most people don't actually understand how payments work and how many
Right.
people, how many entities are involved in that. And maybe they will, why would they care,
Right, right.
So I think, I don't know what's going to happen with America. I even think about myself. I'm like,
Hmm.
I work in payments. I understand what a stable coin is. Do
Right.
I want to use a stable coin?
Yeah.
And I don't really know what a
Hmm.
stable coin gives me on a day-to-day basis.
Sure.
However, I do think that it could probably be used more as just an additional option, like an additional payment option.
Yeah.
Like, and why I say it that way is because I also am a consumer. I don't send a lot of cross-border payments.
Right,
So
exactly.
I could imagine that if you are a person that sends a lot of cross-border payments, like, yeah, you might be, if you are given an additional option that is less money, is quicker, I would probably do it, and if that's
Yeah.
what a stable
Yeah.
coin provides, then I think that's what it provides.
Hmm.
Again, I just always go back to making sure that is consumer protection around that
Exactly.
and making sure that there's like options in case people make a mistake or there's fraud and all of that stuff. But I even the other day, like, as we've talked about, Ethan, I'm moving and
Right.
we had to pay our moving company, and the options to pay are literally on a very, like, we'll just say it's like 10 grand.
Sure.
It was a credit card, which means that it was anywhere from 2 to 4% on the total value. And I was
Yeah.
like, I'm not spending $400 or whatever,
Right.
on just to make this payment. And
Yes.
the only other option that we had was to go get a cashier's check
Yeah.
at the bank.
God.
And even that has a $10 fee.
Hmm.
So, and I'll be honest, like that's not very efficient for me.
No,
Like
no, it's not.
I have to now go down to the bank physically and prove my identity. And so I understand the identity aspect because of the fraud problem. And that's what I think is
Sure.
so hard. There's just all of these like push and pulls. But I even was thinking of making sure like, oh, I can make the payment efficiently, but I'm not going to have fraud happen to me.
Right.
And so in that regard, like I think that a stable coin could serve a good option for
Exactly.
specific
Hmm.
use cases. And
Right.
and I would imagine that that's maybe what we're going to see in the next couple of years is
Hmm.
companies and institutions trying to find out where those use cases are
Right. Like really trying to
and
prove themselves to consumers. Yeah.
yeah, and
Yeah.
and building up I think the trust and
There
reliability
you go.
of those use cases to consumers. And if that's the case, then like I think I could see that maybe developing over time for sure.
Right. No,
Yeah.
that's absolutely awesome. And I really appreciate you, saying about that story that you had with your friends, like not really caring about the stablecoin stuff. But
Yeah.
like that's exactly why we have this show, and so Megan, thank you again so much for coming on, keeping it capital. We really appreciate your time and expertise. This was a super, super informative conversation and one I'm sure, our audience is going to absolutely love. So thank you for getting into it with us. We really appreciate your time.
Yeah, thank you for having me. It's always fun to talk payments. So
Awesome.
appreciate it.
Awesome. All right. Well, for those of you in the audience, remember you can find us on LinkedIn, Substack, and YouTube, and also on Spotify, which is where this episode will be airing. So, yeah, thank you so much for your time, everyone. Take care, Megan.